Ah, there we go. Hello, Elizabeth.
Hey, Bacco. How are you?
Hey, I'm great. How are you? Good to see you.
Good. Yeah, likewise.
I'm so excited for this.
Me
I'll,
too.
yeah, so I sent you the questions last night, but we can take this conversation any way you'd like.
I thought they were good. Thank you. You even primed me with the right answers that I had to say.
I was like, I'll help you out with a couple of talking points.
Um,
Perfect. Excellent, cool. Well, I might actually open this up then, get the attendees in. Live attendees, I'm not sure how many we'll expect, but we're also recording this, putting that live on LinkedIn as well as on YouTube afterwards.
okay.
Um,
Yeah, cool.
Awesome, good stuff. Right. So I'll start off with the intro and then I'll kick us off with some questions. And there we go. Let's do this. Hello and welcome, everyone. I'm so excited for this our conversation today with Elizabeth Yin. Before we get started, I want to give a shout out to our sponsor, Banter, who is the leading trust management platform that helps to simplify and centralize compliance and security. So that if you ever want to get your ISO, SOC, or GDPR certified, um, check out Banter. It is loved by many, many Aussie startups like Atlassian, Dovetail, and lots of Startnet alumni as well. Let's kick it right off. Elizabeth, I'm so excited. We only met a couple months ago, but I have digested so many of your podcasts, and I'll actually give a little bit of an intro for the audience as well, just so they've got a bit of context. But you started off in Google as a product marketing manager. You then became a founder of LaunchBit, of an ad tech platform. Went into 500 startups, which I really want to dive a little bit deeper into, an accelerator as a partner. You've met 700 investors to raise an $11.5 million fund, the first ever hustle fund, which I'm really curious about as well. And the one thing I picked up that I loved the way you talked about hustle fund is that everyone at hustle fund has one value, which is kindness. So you can guarantee that you will absolutely love them, which was such a cool thing to do. So yeah, so excited to have you here.
Thank you. Thank you, Bacco. Thank you so much for having me. I'm super psyched. I mean, I'm a longtime admirer of StartMates, so I'm really excited to do this with you.
So cool. And also for everybody listening in right now, we're gonna have a slider going around as well. So please ask all your questions. You can see the agenda here on the side too, and I'll be going into all your questions towards the end as well. Um,
Yep.
all right. Well, the other thing that I picked up in some of the podcast is someone asked you how would you describe yourself, and you went with I'm an underdog. My superpower is self-awareness, and frugality was one thing. But the other part, which I loved, was um, your also like the whole origination of Hustle Fund with like speed and ridiculously early. So let's actually dive into some of these. Let's actually kick us off maybe with you were a founder yourself. What lessons did you take away from founding into Hustle Fund?
Oh my gosh, so many. Yeah, so I left my cushy job at Google in late 2008 and started a company shortly after that. So for those of you who remember, that was not a great time in the world as far as like the financial markets go. And so I had just read a TechCrunch article called Rest in Peace, Good Times, about how Sequoia was not going to be investing in anybody new going forward and that the VC markets were basically dead. And I decided to leave my job anyway because I was not sure what exactly I would be looking for when the markets turn. So I decided to start my company in late 2008, early 2009, and I had no idea what I was doing. So I had so many lessons learned. And keep in mind, this was all pre-lean startup philosophy. Eric Ries and Steve Blank had not started writing anything yet, or giving talks, or writing a book, or giving classes, or whatever it is. They did not exist on the scene as you know. So as far as everything went, there was no philosophy on how to start a company back then, and very few people were blogging or creating videos on tips and tricks. And so I just really had no idea what I was doing. So to answer your question, kind of everything, but my main takeaway actually from that experience, since I could not raise any money, is it's really important to have strong business fundamentals. And what does that mean? It's very simple, actually. Business is quite simple. Executing on business is hard. So the simple part is you want to be bringing in more money than is going out the door. That's it.
Fair.
And you can ignore kind of everything else. And I think sometimes people will get caught up in doing all the wrong things because of fundraising and, they get VC capital or whatever. But ultimately, that's it. Bring more money in than what's going out. And that's kind of how I think about business today. Like, what are founders focused on? Are they focused on customers? Are they focused on revenue? How are they going about that? How are they thinking about that? Even at the pre-seed level where we invest, where we're investing pre-revenue, like what are they doing to kind of get to the chase of that? And that's largely how I think about things. And then on the flip side, how you're managing your expenses, what is your burn rate, things like that. That matters a lot to me.
Yeah, got it. So actually, let's double click on this one because you talk about investing hilariously early. And what is hilariously early for you?
Yeah, so our sweet spot is, call it two people in a garage. Maybe they have something half built, but I think above and beyond, they have spent a lot of time with potential customers, whoever they think is their customer persona. They understand the day in a life of that person really well. They understand the problem really well and in a very nuanced way because they've spent a lot of time with these people. And when I think about, even founders, my best founders who have grown their companies tremendously, they have Thanksgiving dinner with their customers. They are best friends with their customers. It may not have been that way in the beginning, but they have worked their way into those circles to become good friends with their customers who really understand their lives. And so that's the kind of activity or motion that I'm looking for. You can compare, let's say, two founders, somebody who just starts building and maybe has loosely talked with a couple of people, or you have another founder who has called up 20 customers within, a week of leaving his or her job to really understand what are the problems, who are these people, getting to be friends with them, etc. Like, which founder would you rather back? Like, we very much prefer the latter.
Yeah, totally. And what kind of signals do you look for in the early days then? And almost like
Yeah.
before you invest and after you invest your first check, is there a difference as well?
Yeah, so there's no revenue signals that we're looking for. I think actually from my time at 500 startups where we were investing in companies that had traction, and that was more or less a criteria at that time. I don't know about now, but I realized that actually traction is a little bit of a misleading indicator. Really, what you're trying to understand is what is the reason behind the traction. But it's the traction itself is not very informative. I mean, I think on some level it tells you that the founder can land a customer or a couple of customers, but really you want to understand like why is it that people buy? Like what is the specific problem that these people have? And so that's what I'm really trying to understand through the lens of the founders that I meet. And so the more you have a nuanced understanding of that, I think, the higher likelihood of getting funding from us because you can convey that in a very nuanced way.
Hmm.
I think another thing that's a consideration that actually has nothing to do with progress is, especially in this day and age, we care a lot about how crowded a space is. So a lot of spaces are getting very crowded. People are competing globally, right? Founders are all competing after for the same opportunities worldwide, and so if a space is very crowded, by definition, customer acquisition cost goes up because you're just fighting with the same customers as everybody else. And as a small fund, it's actually not a great situation for us because we're writing a small check. You'll need more money. We can't provide that. We'll be diluted down by a larger fund, et cetera. And so we would prefer to go after spaces that are way less crowded. So that's another consideration for us as a fund.
Yeah, got it. Well, hold that thought. I want to go into that in part three then with your investment pieces. In terms of your investment itself, I think I heard that you essentially your first check is a 25K check and then you follow on afterwards. Is that still the case?
We've increased it to 150K.
Got it. Okay. Yeah, cool. So that's kind of like your first check at 150 and then you want to keep doubling down on the company. Yeah, okay. Awesome.
We'll double down at seed about 20% of the time, but it's not actually a very common thing for us to do.
Hmm. Cool. Okay, cool. And the other part, which I loved, obviously because it's very close to home, is your experience at 500 startups. And the way you talked about it was like almost like decision making and velocity of the decision making at which you just can't get in a venture capital fund. Yeah, just talk to me about the difference here.
Yeah, it's investing on steroids actually teaches you a lot. I think, I didn't, so I, after I sold my company, I started mentoring other companies and doing some light angel investing to try to, collect my thoughts and kind of figure out what people were working on. I was just very heads down in the ads world with my own company, but meanwhile, in 2014, there were all kinds of other crazy things going on. Crypto was starting to become a thing, drones were becoming a thing, VR was becoming a thing. Obviously, some markets have really ballooned more than others at this point, but there were all these new spaces that I knew nothing about. And so originally I just wanted to spend time with other startups to learn and help other people avoid the mistakes I made. And I went through the 500 Startups Accelerator program with my own company. So I went and did some of that there as well. And one thing led to the next. I ended up getting sucked in and ended up working on staff there and ran their accelerator program for several batches, where I led about 200 investments. And the thing about that is, you know, as you know very well, the sort of standard accelerator models, you make a decision pretty quickly. Like for us, it would be one or two interviews, 20 to 30 minutes each. And then the companies come in and they work out of your office for 4 months or whatever, and then there's a demo day and then they leave. You get a big glimpse into what they are doing during those 4 months, the good, the bad, the ugly. And so I really learned, like, okay, from this feedback I'm getting of what all these people are doing during these 4 months, I really learned how to kind of revise my thinking on what I'm looking for when I'm investing. Like the first checks that I ever wrote, I had no idea honestly what I was doing, and did the person sound smart and did they seem knowledgeable about this thing? But then over time it's like, oh, okay, this matters, this other thing matters, this thing doesn't matter, things like that. Like one thing I've refined my opinion on is traction. Like a lot of, I think, early investors who are earlier in their careers often rely on traction almost like a crutch, where it's like, okay, there's traction, so that's an indicator that this is going well and that this is going to be a big business. But there's a long way between 100K ARR and 100 million ARR, right? So I think I've learned to downplay traction a lot. But when I first started my career, I relied on traction as a strong indicator in who to invest in.
Yeah, fascinating. Like you said, it's the velocity, almost the decision making and the speed of signal to quality, because you see companies go through it so quickly. All right, final question then about yourself and Hustle Fund is, I have to ask, what the branding? I absolutely love it. What's with the hippo? What's with the website? It is so cool.
Oh, it's just a fun thing. I mean, like, where else can you have a company with hippos in it, except for your own? And so it's just fun. But I think, in all honesty, and the tropes are real with VCs, like, around here, VCs have their vest and their Patagonia vest and their Allbirds shoes and their whatever, and they're very cookie cutter and professional, but also a little bit stiff. And we're former founders ourselves, and we know that people get kind of nervous in going into VC meetings. And so to kind of take the edge off, like how could it's really hard to take yourself too seriously when you have like silly purple hippocorns like running around. And hopefully it takes the edge off a little bit for founders who are pitching us.
I love it. It's so cool. The website is amazing as well, by the way.
Thank you.
All right. Well, let's go into part number two, which is the biggest interest area for all the founders on the call right now, which is Aussies and Kiwis and how can they stand out in the US. So I guess the first question which I always get is the one of, should I build my company in Australia or the US? Is there a difference? How do you look at that?
I think like everything else, it really depends on what your goals are. I truly believe that you can build an internet business from literally anywhere in the world these days. But the question is like, what more are the criteria around that? So, for example, if you are looking to raise loads and loads of venture capital money and really shoot for the moon and go big or go home, and you want to be on the cover of the Wall Street Journal or whatever it is, like definitely move to San Francisco or New York to do that. I think that that's where you can raise the most money, right? Like you look at the numbers and that's where you go. But if the idea is like, well, I want to build a business and I don't care about all those things. And in fact, actually, I don't care too much about raising money. I just want to go and build a business, and maybe it's a SaaS business and just keep on getting customers and grow. And you can actually you can grow a pretty big business over time, even without venture capital money, if you're working on the right kind of company. I have a couple friends actually in Australia who are doing that. They haven't raised very much money, but that's not what they were gunning for. Like they're just, they're looking to get tens of millions in revenue, and they've done that, and you do it without VC capital, and then they can write their own destiny. They can sell it if they want and make a lot of money for themselves, or they can keep running it, and they have a team now doing most of the work. Like, that's nice. And the cost of living in Australia is certainly anywhere in Australia, even downtown Sydney, is probably like way cheaper than San Francisco. So like what are you going for? Like it really depends on what you're going for, but we've certainly backed companies in Australia. Some of them decide to move, some of them decide to stay, but it really depends on what you're looking to do.
Yeah, I got it. And for someone who hasn't been to San Francisco, New York at all, and what kind of difference can they expect between like Sydney, Melbourne, and Auckland to San Francisco? Like, what's the cultural difference? I've been a couple of times, and it always surprises me so much. But yeah, what is it from your perspective?
Yeah. I think if you come to San Francisco, it's both inspirational and you get thrown in the deep end very quickly. And so you become a very small fish in a big pond because when you think about it, we have a lot of entrepreneurs who are coming from literally all over the world. And generally, people who are up and moving to San Francisco are very ambitious people. And they're all coming into this one city. And so you go to any cafe and everybody's talking about their business and or pitching a VC or talking with a friend who's a founder. Like everything is like startups, like all day, every day. And I think for a lot of people who've never been to San Francisco before, that actually is a breath of fresh air at first, because people are like, wow, there are people like me here, and they all want to change the world and all this stuff. And then over time, you see people get like very disillusioned, like, wow, that's all people do here. And it's very competitive, and the cost of living is high, and your money doesn't even go very far. Wow, I paid $10 for a latte. Like, you know, so it's a mixed bag, right? And but I do think that people, it is an experience to spend at least a few months in San Francisco, at least once in your life, just to do it and experience the culture and build a network. You can actually build a network fairly quickly just by going to events. Like there's an event every day. There are multiple events every day, and you just go and you meet lots of people and build your network that way. But I would say that my number one piece of advice is if you're going to move here, like you need to be prepared to like really level yourself up quickly because people are very ambitious here, and it is a little bit sink or swim. And I think actually that is good impetus and motivation for people to move faster in their businesses as well. So it works both ways, but it is a pretty competitive landscape. And I think even when you're pitching VCs, like Americans talk big, so you gotta talk big as well, and sell the dream of like this is going to be whatever $10 trillion company or something like that, even though it most likely won't happen. But that is the culture.
Yeah, right. And is there anything in particular that Aussies and Kiwis kind of stand out for? Like what we're uniquely good at, or like how can we almost like stand out of the crowd there?
Yeah, I think the ultimate entrepreneur is a mix of different qualities. I think even if let's say you're raising money, um, you knowing how to pitch and kind of sell the dream is an important skill. But I think an even more important skill, kind of going back to my initial statement, is like understanding how to build a business from business fundamentals is the more important thing. So even if you are able to raise money, like I see too many people kind of go off the deep end and spend it all for no good reason on things that don't matter and they don't prioritize the right things, etc. Like that's when you have these big blowups. But the people who are really good at kind of walking this line is, people who can pitch and make sure there's enough money in the door. And it may not even be raising loads of money, but enough money in the door, and then really prioritizing the business fundamentals of, all right, how can we keep our costs low? And this is actually where I think Australia is helpful because I actually think, one of the issues with the US is like the cost of living in many major metropolitan cities is quite high. And, I think that it's actually better elsewhere in many other places to maybe have a team. You don't have to pay them as much, especially on engineering talent or design talent. And so you can save money and just like focus on your business. And then also I think there's something to be said about like focusing on your business in a location where maybe it's not startups all the time, where you can just like focus on, all right, what is important? I'm not going to get caught up in the noise. Just like, what is it I need to do with my business today, tomorrow, the next day, et cetera. And I've met a number of Australians, I think language is no problem. Culture in general is no problem. It's similar enough to the US. So you understand that really well. Just come here, raise some money, build a team in Australia, and then, just I think that is actually the sweet spot.
Yeah, right. Interesting. So you mentioned something there at the end, which is essentially do build the team in Australia, make it cheaper. Is that right?
Yeah, maybe the product team.
Hmm.
That I think is where you can get a lot of savings. Engineering talent here. You're competing with like Meta and Alphabet and all these other, Nvidia even these days, right? And they're getting paid $500,000 to $1 million US like a year.
Hmm.
So it's going to be hard for you to compete with that.
Totally.
Um, and I think actually in this day and age, you don't need to be a rocket scientist to be able to build an internet company. Like I even have founders who are creating their first prototypes using like AI generated scripts. So, I think just you can build these great sort of cross-border teams. Maybe you have a couple of people here to kind of focus more on customers if you're selling into the US market. And then also, maintaining those relationships with VCs if that's what you're doing, like going down the VC route.
Yeah, totally. Cool. Um, One last question there on the US investors and Aussies Kiwis. What's the best way to get an introduction to a US investor? In Australia, everything is only one step removed, but what's the best way for someone to approach a US investor?
I think it's a lot easier to spend a few months here. So come over here. And then there are a few ways to do it from here. So one is you could join an accelerator in the US. And I don't know if I should be saying this on a start mate call, but that is an option. They have networks. Obviously, not all accelerators are equal. So you want to be making sure that you are, talking about accelerators that are well connected and we all kind of know who those folks are. But another way, like when you're here, is you'll meet lots of other founders, and every founder knows other investors, either investors on their cap table whom they can introduce you to, or even actually just going to all the events here. Like there are actually a lot of investors here. It is still hard to get yeses, but there are a lot of investors, so you can meet lots of investors and just kind of build your network, like from founders to investors or investors to investors. Go to the events. It actually is. I don't want to say it's easy. You obviously need to spend the time, but like I think once you're on the ground here, just like the network is so large and there's so many people, like there's always somebody connected to somebody or other.
Yeah, I love that. And finally, what does someone get an introduction to you? What's the best way to reach out to you?
Yeah. So a couple of thoughts on that. One, if you want to pitch us at Hustle Fund, that's not the best way. We actually take all applications on our website, hustlefund.vc, and we have multiple people on our investment team hopping in there and taking a look. Um, and I would say that I actually probably do one of the fewest number of investments on our team. So you probably want to go that route and maybe end up getting somebody else statistically. But I think, if you're like, I do actually look at every cold email. If you're looking to pitch, like I don't respond to those. Like I think I'm an autoresponder saying to pitch on the website, but I think if you have a specific question, I'm happy to weigh in on things. And my email address is just elizabeth@hustlefund.vc.
Awesome. All right. Well, let's go into number three then, which is the themes. And you already prefaced this a little bit. You said you love to invest in not crowded spaces. Give me some examples. Or like, well, how do you think about that? Is it almost like whatever's hot, we go the other way?
Yeah, mostly. So like we actually have not been doing a lot of AI investments lately. We did a lot more about 2 years ago. But I think hot spaces are, I kind of alluded to why I think they're challenging. One is the customer acquisition costs are just hard as a founder. Um, Obviously there's money to be made, otherwise not everyone would be flocking into that space. So you can still make a business out of it. But I think it is just a harder sales cycle then, right? Because now your potential customer is considering 20 different options and they're trying to figure out which one to go with, and they don't go with you, they go with someone else or whatever it may be. Also in crowded spaces, your competitors who are better funded, especially in this day and age in AI, if they are like an incumbent or they've raised a lot of money, they can literally drop their prices to near zero and you could be out of business overnight. And I've seen that happen actually in AI. So that's kind of why I don't really love that. But then the question is, all right, well, what do you love? And I would say that this is really hard to articulate because in every industry, there are spaces that are crowded and there are also spaces that are not crowded. And so it's a matter of finding that opportunity. So I would say in broad strokes, we do a lot actually in emerging markets, like investing in emerging markets, because there are very clear needs. Like, okay, payments need to exist, loans need to exist, infrastructure to underwrite loans need to exist, whatever it may be. And in many countries, these things just don't exist yet. And they've been done in certainly other countries like Australia and the US, but they haven't been done everywhere in the world. So we do a lot in emerging markets. So that in broad strokes, that's one area. I think even within popular industries, there's still a lot to be done. Or newer industries like that are just starting out where the market doesn't exist, but it's just starting. So like a few years ago, crypto, for example, like that was a new industry, so it wasn't crowded. I think, we're willing to make the bet in many cases that this thing doesn't exist today or is a very small market today, but it can grow tomorrow. Even in existing industries, you have that. For example, the pandemic spurred on telemedicine.
Hmm.
Telemedicine didn't really exist as a large industry before the pandemic, but now it's a pretty big industry, and that was a bet that we made with several companies like during the COVID time period. So
Yeah.
so there's always like some trend or mini trend in every industry, and it's a matter of kind of finding the ones that are kind of nascent, but we think are going to be growing.
Got it. And have you got anyone on your mind right now, like a nascent trend, an emerging trend? You don't have to give away all your secrets, but if there's any founders, for example, listening, whether they should reach out to you off the back of that.
Yeah, no, there are lots. And I'm happy to give this away because I'm hoping that people will do these. So I think actually with regard to Australia and the US specifically, I think there are interesting things still in fintech. I don't know exactly what they are because I don't understand, regulation. I'm no lawyer, but for example, it's way easier to have companies go public on the Australian markets than IPO in the US. Like IPOing in the US is just very, very hard. No one wants to do it. Stripe has, I mean, Stripe is a huge company and they haven't gone IPO yet either, right? So is there kind of, I don't know, just thinking out loud, like, is there a way for US companies to be able to go IPO in Australia? I don't know. Like, this is an open-ended question, but something I've thought about. Or other ways to get liquidity or on the flip side, one of the things that I think is challenging is also even investing in the public market stock across border. So a lot of it's very hard for folks internationally to invest in the U.S. public stock markets. I imagine the flip side is also hard. There are different sort of sleeves that you can do these days. But like, are there kind of better cross-border, I don't know, investment mechanisms, like as a broader question. So these are, I don't have a concrete idea for anyone, but these are kind of areas that I've thought a lot about because there are just some challenges that we've had in kind of some of these areas. Um,
Yeah,
so
got it.
anyway.
Yeah, I love that. And let's actually double click on another part which you just mentioned there, which is emerging markets and geographies. And so based on your portfolio and on the website as well, like you invest all over the world. And do you have any particular countries or areas where you love investing in for different reasons? And if so, why? Like, what are the countries that you get most excited about?
Mm. Um, there's no place in particular, but I would say that you know, where I've had probably the most, I don't know, success off the beaten path. I realize it's a weird qualifier, is funny enough, probably the Toronto market. Um, because kind of like Australia, right? The Canadians, they all speak English fluently and culturally similar enough to the US where it's like really easy to assimilate and raise money from VCs and whatnot. Time zones are better, I guess, off of Toronto than say Sydney or wherever, but I think the other kicker about Toronto is like they have a lot of strong tech talent in that city just from Waterloo and some of the tech companies that have moved up there. They also have a lot of amazing government grants around tech. Like, during the pandemic, a lot of my US companies just they failed. They couldn't raise any money. They didn't have a lifeline if they were in industries that went to zero overnight. My Canadian companies were all fine. Like the government sent them all money and they were
Mm.
fine because they do a lot in grants. So I think like just from a just sort of everything combined ecosystem perspective, I really like the Toronto ecosystem, but like you said, we invest everywhere and we don't have a majority portfolio there.
Yeah. And when you are not on the ground in a country, how do you then source deals or how do you meet the founders? Yeah.
Yeah, so actually, even in the US, we do a lot of things online. Like we do all of our meetings with founders, whether you're in San Francisco or halfway around the world, through a Zoom call like this. And so it really actually does not matter to me like where you are. And in fact, I probably don't even know where many of our founders are because these days people tend to be a little bit more nomadic. The way that we source in general is through the internet. We get a lot of referrals either from other founders. We have a pretty large portfolio now, so a lot of them obviously have friends who are founders, but also through other VCs, or even just like straight up direct, like through the website. We do get back to everybody, so we are looking at everything, and that's how I mean, we don't need someone else's validation to decide whether or not to invest.
Yeah, I
The
love that.
primary criteria is like, again, do we think that it has good basic business fundamentals and the founders are prioritizing the right things? But also the volume helps us understand where are the crowded spaces and where are the empty spaces.
Yeah. All right. Prioritizing the right things. Let's double click on this one because what are the right things in the early days?
Yeah, so going back to sort of what are the basic fundamentals of building a business? Like, I think it's all about customers. Like, and when you're pre-revenue, it's about figuring out, all right, is this the right customer persona? What problems do they have? Really understanding those problems, and then do you think that you can solve them in an effective way? And it really isn't much more than that. It's pretty simple in theory. It's just hard in practice, and sometimes things that you initially may think is a problem is not actually a that dire of a problem. And you may have to go back to the drawing board and figure out what is a different problem that's tangentially related or whatnot. But like, yeah, the general philosophy is easy. The
Yeah.
execution is hard.
Yeah, so let's actually talk about the execution. Maybe even some examples of like what is let's make it almost like tangible if I don't know if you can, but like along the lines of how many customers per week would you talk to, which is good or great? And what you see kind of in your portfolio of like the best founders that you kind of come across.
Yeah, it's not about a particular number or volume, it's more about quality. So, um, in some of my portfolio companies that are at, let's call it the Series B level and beyond, like the best ones, like I kind of mentioned before, they are best friends with their customers. Like they hang out with their customers Friday night or whatever, or they go to each other's homes for dinner or things like that. Like that's kind of the level of quality of the relationship you want to get to. Now, obviously, that's not going to happen overnight as a pre-seed stage company, but like that's what you want to work toward. So if you're going to be a Series B company and, you know, ideally 3 or 4 years, which would be a fast trajectory. How do you get a friendship onto that trajectory? That's how I think about it, actually. Like, how do you become like that good of friends with somebody in 3 to 4 years? And so that means you start today and you gotta like not just learn about like not just read off a list of okay, these are all my questions. Okay, thank you, bye. But just like you gotta build like rapport and build a friendship. And that's how I would think about it. And so that's where I would spend time. And you do want to do that with a number of folks to ensure, okay, this one person I'm spending time with is not the only person who has this problem. You want to get enough of a sense of, all right, maybe there's a handful of people who all have the same problem, and so that's a good proxy for all these other people who have the same problem. But you definitely want like at least a good mix to make sure that this problem is not just isolated to a small number of people.
Love it. Amazing. So like deep, deep customer love, getting to know your customers on such a deep level there. Awesome. All right. Well, let's go into part number 4, which is probably the most exciting one to everybody on the call. There's been lots and lots of Slido submissions. So I'm just gonna go top down with the with the most upvotes here. So please jump on in, pop in your questions, vote any questions up as well. And the top one right now is What are the top three character traits you look for in a highly backable founder who can deliver over the long run?
Oh wow. So many. Well, I mean, I think per our name Hustle Fund, what we mean by hustle is like speed of execution with focus. So that's something that's really important. I think as a founder, there are 20,000 different things you could be doing, and you could spend all of your time doing all of them. But really, there's typically only one thing that matters at a given time, and that's like where you should be relentlessly driving toward. So hustle is probably our number one. I think for me, I care a lot about frugality and money management. That actually goes a long ways when times get tough. Like the founders who can just kind of make it work to live another day, another month, like that may be enough to kind of turn it around. Versus if your burn is way too high, like that's just really hard to say when things get tough. And then perhaps the last one, which comes in later, is around hiring. Like, do people want to work for you? Do you have have you set good company culture? Um, you know, like how do you attract talent beyond yourself? Like I think in the first inning, you are an individual contributor and you're kind of doing a lot of the things yourself. But over time, like putting great people in place is really important. And I think, sort of as a tie into that, great people in place whom you can afford is like the challenge. Like you don't have unlimited budget, so how can you kind of make it all work? So
Mm.
all three kind of are a bit interrelated, but those are my three.
Yeah, I love that. And double clicking on culture, because such an interesting one, because every single company's culture is going to be so different. So what are almost like the great parts of culture, or like the key threads when you see the culture of a company being like, all right, this is great culture.
Yeah, I mean, I think every company has different culture, and there are some places I would never want to work, but I would say their culture works for them. And then, but I think making sure that you have very clear culture and that the people you're attracting are a good fit for that culture is the most important thing. So, you know, like winding the clock back, like when I was working on LaunchBit, uh, I was working with actually an executive coach from Australia who was really good. And he said, you need to develop your culture, you need to develop your values for this company and all this stuff. And I thought, oh my gosh, this is so fluffy. Like, why do we need to do this? Like, we have a lot of other important things to do. That was my initial reaction, but he was absolutely right in that you're setting this up for the long run. And so, when you set up your culture, like it's basically a code of how you want people to behave. And your values are kind of a code of what are the things that are most important to you as a company and actually in an order. So for example, if one of your values is, I don't know, experimentation, but another value is, I don't know, independent thought or something like that, whatever it may be, like where do they kind of stack rank against each other? Because like when you have a conflict between employees or even between you and your co-founder, you can use your values to kind of argue like, well, we need to prioritize this because we said in our values that we really think experimentation is the most important thing here, et cetera. So so culture is more about how you want people to act, and values are more about like what is important to your company. And they all go hand in hand, but they're very important. I mean, a hustle fund, as you kind of alluded to, Bacco, like kindness is an important thing for us, like in our culture. Like everybody we hire has to be a kind person, even if you are an amazing, whatever, investor, operator, et cetera. Like it's not going to be a good fit, like if we don't think that you kind of hit that kindness bar. Like that's just something that's really important to us because we believe that Hustle Fund is a very public brand and every interaction that people have with us, whether it's at our events or online, like on Twitter or whatever, they should come away feeling a certain way.
Yeah, I got it. I love that. And thanks so much for the deep dive there. And your own experience with LaunchBit as well. Makes it so much more real. All right, second question here is by Antonio. Once you have made an investment, how do you close the feedback loop of whether it was a good decision and a good investment?
Yeah, great question. So what we do at Hustle Fund is actually our deal memos are largely based on ranking companies based on a number of axes. So For example, we have a scale from 1 to 4. That forces us to pick a number that is either on sort of the good side or the bad side, 1 being worst, 4 being best. And you can't pick a number in the middle. It's not a scale of 1 to 5. And so for various axes, we rank or we score, things like team, product, market size, etc. Obviously, we could be wrong, but when we write the deal memo and we decide to invest, we're doing this scoring exercise, and so like that allows us to then come back to this later. Like we have an automated email that pings the person who did the deal 6 months later saying, okay, rescore based on your interactions with this company on all of these things. And then you can see in these discrepancies, like, I thought, the team was great because of ABC reasons, and I had written that back then, and actually they're not because of DEF reasons or whatever. And that allows us to kind of get some learning in from that reflection.
Yeah, I love that. And I think that actually brings me back to something that I heard on the podcast too, that you invest a lot in your internal processes, and you actually automate quite a few of these things. Is that right?
Yes, we do. One more anecdote on like learning though. I mean, there are all kinds of tidbits I could share about, some of the learnings I had at 500 startups. One of the earlier lessons that comes to mind is, you know, uh, there was a company we invested in. They had seemingly loads of traction. And again, this was when I was earlier in my career and I cared a lot about that. They had a contract that was signed for a lot of revenue, but like, you know, months and then even years went by where nothing happened in the contract. Yes, it was signed, but the customer never did anything, and so they never had to pay. And then that was a learning to me of like, okay, well, having a signed contract is not enough. Like,
Wow. Yeah.
so how do you, if I come across that in another company that says, oh, we have a signed contract, like now I ask more questions about the nature of it, when it gets executed, like all this stuff, right? But that's just a concrete example of like a learning that I had from a company from before. And a lot of companies in my earlier days like have specific learnings tied to them, but these days it's less so of that and more in this sort of scoring exercise. But yeah, when I first started, I had some major learnings around, some things that people would say and I would invest. And then like actually the thing I should have looked at was this other thing and stuff like that.
Yeah, got it. I love it. So many lessons there. The next question is a very, very big one. So you might have to approach the first slightly higher level there. But it essentially is the question of how does a company that is pre-revenue get investment? So there's probably a couple of different avenues here.
Yeah. So most of the companies we invest in are pre-revenue. And so kind of going back to, well, what is it that we're looking for? It, we don't care about the traction. We care about the understanding of whether we think that this is actually a problem that people will pay money for, like a strong problem that people will pay money for. And by way of figuring that out, we want to understand like, okay, what has the founder done to come to this conclusion that this is the problem that they think is worth working on, and like, who'd they talk to, what they learn, what are all the nuances of their customer, etc. So it is very qualitative. But like that's the kind of thing that we really want to understand, like through your eyes, like you're teaching us about the problem, and then we want to feel like when we walk away from the conversation, we really understand this problem so well and the day in the life of the customer so well. And I think if we don't feel that, then we feel like, okay, the founder doesn't really understand this very well.
Yeah, okay, so it goes super deep there. It looks like you've inspired a couple of founders on the call to move to the US. So now the follow-up question is, where should they move to? Like, how do you look at the different cities of the US? What are they good or bad for?
I think, and so many Americans are going to send me angry notes, but like, I think, there, like, if you're going to make the move, there are two cities that I think you should consider, New York or San Francisco. Like, yes, you can build a great company in LA. I have plenty of founders in LA or Seattle or Boston or wherever, Atlanta. But if you're gonna make the move, like, you want to be making the move to like the place where there is the most funding, if that's what you're going for, which is what I think people are doing. And that is like San Francisco or New York. And for New York, it's more specifically if you're a fintech company, like that's probably where you want to be. And then for SF, it's even if you are a fintech company, SF, it's like kind of everybody. So that's what I would recommend. Now within SF, like the Bay Area is large. You don't have to live in San Francisco proper if you don't want to. A lot of the meetups and all for founders, they do happen in San Francisco proper, and traffic is really bad. So you may want to consider moving there first, getting like a very short-term rental, check it out, and then decide like after you've explored other areas of the Bay Area where you may want to move. If you have a family, San Francisco may not be the best place for your family. There are more suburban areas where people live, around San Francisco, and you can take the train in or the subway or whatever it is. But I would just, scope it out, do like a very short-term lease or something. If you are coming by yourself, there are all these hacker houses where you can cheaply share a room with 8 bunk beds in a room to try to save on money while you're kind of exploring the area.
Yeah, I love that. And I think you touched on one of the most surprising learnings when we went down there, because we had like a start day cohort sometimes and San Francisco, which is just actually how big Silicon Valley is, because getting from one place to another actually takes you an hour or an hour and a half. Yeah.
Yeah. And if you're coming here just to pitch, actually, you might have some meetings in San Francisco proper, and then you might have some meetings in the Silicon Valley, which is like Palo Alto and Mountain View, Menlo Park. And that's where Sand Hill Road is, where the older technology, I guess, investors tend to be. And by older, I don't necessarily mean age, but like firm. And and so you may have meetings in both. I would set a day just to do meetings in one, and then a different day to set meetings in another place. I would not try to commute all up and down because it will just take you too long and you'll be late.
Yep. Great tip, actually. Also, well, the next one is around the hustle fund phases and how you look at B2B versus B2C and whether there is a difference there for you.
We primarily do B2B. So the categories we generally invest in are broadly B2B, fintech, and digital health. On occasion, we've done a little bit of consumer where, you can make money more or less right out of the gates. We would miss out on like an Instagram or something like that, just because we're a small fund and we come in so early that this company has to be a viable business in a relatively short period of time and cannot rely on VC funding to carry them through for 5 years.
Yeah. And the follow-up question here was in B2B, how you look at the different segments of businesses of like small, medium versus selling to enterprise, and if there's a difference there for you.
Yeah, we've done investments in, from elephant hunting to whatever they call it, mosquito swatting, and everything in between. I still think that the sweet spot, as I think it was Christoph Jans's blog post who mentioned this, is deer hunting, which is not quite elephants, but the sales cycle is maybe a couple of months. I think examples of companies that kind of fit that are other tech startups that are larger than you. So relatively quick sales cycle, but they can put some money to work, and maybe the value of that contract is, I don't know, $1,000 to $10,000 a year, something like that. Like that's probably our general preference, but we've done the whole stack.
Yep. Yeah, right. Everything from elephant to mosquito squatting. I love that. And all right, I'll do another one or two questions and then we'll go into the fast fire round as well. So everybody jump into the Slido if there's any question you really want to answer, upvote it as well. The next one here is around the key factors where you look at prospective investors. You have mentioned speed and execution, but how do you then almost like rate? Because you said you score their startup on market versus product versus team. How do you actually look at the different elements here? Like, is there almost like a priority? Which one's more important?
Great question. It really depends on what they're working on. So I'll give you a concrete example. If you are building a product for designers, or even people who care about design, like Canva might be a good example of that. Like your product has to have good design and UX, and it has to be a great product. But, if you're like a Salesforce, and this is not a knock on Salesforce, but I think we all know that Salesforce is a very complex product to use. It's not intuitive. You even have to go through all their training to be able to use it. They still do well. They still do well, even though it's not intuitive, because they're not selling to designers. So, you have to like figure out like who your target customer is and what is most important for that target customer. And so this is where a team can score very low on product, but if they're not going after designers or whatever, then it doesn't matter as much. But, for something else, a different criterion may be much more important.
Yeah, yeah, totally. And all right, I'll take one more question from here. Um, I'm just gonna there's a couple. All right, I'm just gonna take one here, which might be more applicable for most people in the call. Finding co-founders, especially when you look at people so early on. Firstly, solo founders versus co-founding teams, how do you look at them? And two is if you are a solo founder, if you need to look at a co-founder, how do you find them?
We don't care about that. We've backed a lot of solo founders. And I think part of the reason is I don't believe in forcing a co-founder marriage. It really is like a marriage. In theory, if this company is going well, you're going to be together for 10 years, 20 years even. And it like you really have to trust the person, work well with the person, have complementary skills, etc. And I think that's just really hard to force. I think that there are certainly arrangements that are similar to that that could work well, where you have a solo founder and then maybe a very early employee who's probably not paid market rate, but gets extra equity too, and it's sort of an in-between co-founder slash first employee, where you don't have full trust with that person. That person's not coming to your board meetings and all this other stuff, but you do lean on that person a lot as your first employee. And so that's what I would recommend to anybody who's a solo founder who does not have anyone immediately obvious as their co-founder, because I wouldn't force anything like that. And we don't care about that. I actually know that many VCs do care about that, but like of all the things that I kind of, find contentious, with other VCs, like this is the one where I just scratch my head and wonder, like, why does anyone care about a co-founder?
Yeah, I love it. All right, final three questions, lightning round, but we can also go a bit deeper. Is your most memorable pitch that you've ever heard?
Oh, so many. When I was at 500 startups, we also looked at physical products too, and so people brought in weed products and other things, and so we backed a mushroom death suit at 500 startups once as well. That was interesting. So definitely saw more interesting things, I think, back then than now, because now we focus on software. There's only so many interesting things you can do in software, I guess. But probably the one that comes to mind for Hustle Fund is we backed a company that was trying to change, I guess you could call it publishing, starting with like the comic book format, and through the product itself, the founder essentially made a very personalized, short, very, very short book about his pitching Hustle Fund and getting.
Wow.
So yeah, I'm sure he did that with all the investors, but I thought that was very clever and a good tie-in with their product.
I love that. That's very cool. Yeah, so like a publishing startup essentially making a book for you.
Yeah.
Very cool. And well, actually, which leads nicely into my second question, which is a book that every founder should read.
I mean, I think my go-to is always Lean Startup, but I'm sure a lot of people on this call have read it at this point, or have read blog posts about it, or watched videos about it. Um, I, I do think that I think it was Ben Horowitz's book, The Hard Thing About Hard Things, talking about his founder journey. Like that was just very illuminating. If you are ever down in the dumps about how things are going in your company, like read that book and you will feel much better. Like that was really hard sounding.
Yeah, I love that. And finally, the best advice that you've ever received.
Oh my gosh, that there's too many, but I mean, I think as far as starting a company goes, like going back to what we talked about when we first started this call, is like as a founder, I think you can get caught up in so many different things, and everybody's got an opinion and advice, and there's going to be advice whiplash as well. Um, I think that, an example that one of my companies received advice on was he has some customers in the US and a lot more customers international. And US investors said, well, come back when you have more US customers. And honestly, like it's really easy to think, okay, if only I had more US customers, I could get that money. But that actually isn't the best thing for him to do with his business. Like if you just think about it from business fundamentals, there are many reasons actually why the US customers are not as good of a fit for him as perhaps some his other customers elsewhere. And he should just focus on those because that is what's best for the business. And so I think that like it's really easy as a founder, and I've done this too, to get caught up in the noise of this person recommended this or that person recommended that. And in the moment, it sounds like good advice because you really want to raise from this person or you really want this person on board or whatever it is. But really, actually, the best piece of advice is just like come back to what is most important for your company and like remove all the noise of what everyone else is thinking, and that will be your guiding light in running your business. And that may end up conflicting with all these people's advice. They may have their own agendas and whatever, and but you should do what is best for your business.
What a perfect note to end on. Thank you so much. Now, this is actually an excellent ending. Focus on what's right for your business. Thank you so much for the last hour, Elizabeth. You've inspired lots of founders. We know how to get in touch with you. And if you're ever in Australia, definitely hit us up.
Thank you. Thank you so much, Backcone. Thank you, everyone.
Awesome. Thanks so much.